Tilray Brands, Inc. It is an American pharmaceutical and cannabis lifestyle consumer packaged goods company incorporated in the United States of America with its headquarters located at New York City. Tilray also operates in Canada, Australia, New Zealand and Latin America, including growing facilities in Germany and Portugal.
Tilray latest. The stock of Tilray has been on the decline for several years, but its CEO Irwin Simon recently purchased shares in the open market for the first time. This is despite the fact that in its latest quarter, the company failed to meet profit projections. Simon is positive about the future, saying that there are further acquisitions to be made in 2024 and pointing out Tilray's record revenues and craft beverages. Key points: Tilray stock price down in January. CEO bought shares at $1.88 each. Company not profitable yet, but revenue hit record high. More acquisitions planned in 2024. Expansion into craft beverages with Sweetwater Brewing.
Tilray owns several breweries, including Montauk, Good Supply, 10 Barrel, Square Mile Cider, and Truss Beverage Co. Tilray's beer division ranks 9th in U.S. craft beer volume. In December 2020, Tilray and Aphria strategically merged, establishing the world's largest cannabis corporation in terms of revenue and global reach. As laws and regulations regarding cannabis and hemp evolve in different jurisdictions, Tilray actively seeking to expand their operations around the world. Tilray Brands delivers record Q2 fiscal 2024 net revenue. Record Q2 net revenue of $194 million, increases 34% over the prior year period. Global cannabis leader with #1 market share in Canada and 31% growth in Canadian cannabis net revenue. Medical cannabis leader in Europe with 55% growth in international cannabis net revenue. 5th largest craft beer brewer in the US. Positioned to become top 12 beverage alcohol company with 117% increase in beverage alcohol net revenue over the prior year period. On track to achieve $30 to $35 million in annual savings related to integration of Hexo acquisition. In the past month, the stock has fluctuated between $2.10 and $2.50. The Relative Strength Index, RSI, is below 30, which indicates that the stock may be oversold and could be due for a bounce. The Moving Average Convergence Divergence, MACD, is negative, suggesting downward momentum.
Revenues for the last quarter on May 31st was $627. For the same quarter, gross profit totaled $146.96 million, 25.5% higher than in last year's equivalent period. However, the net loss for this quarter was $1.45 billion as compared to $1.09 billion last year's. The persistent net losses demonstrate the struggles of Tilray Brands to become profitable. Operating for the quarter was $1.52 billion, which significantly more than revenue. This led to an operating loss of $1.37 billion. The high operating costs could be attributed to the fact that Tilray Brands invests its money in growth strategies like acquisitions, advertising, and selling promotions. It is understood from the income statement that Tilray Brands is a company with growth and whose gross profit margin outlook looks quite healthy. But the firm still operates in losses and has a rocky road to profitability ahead.
Current ratio. Tilray's current ratio has been steadily declining over the past 3 years. This means that the company's current assets are becoming less able to cover its current liabilities. Debt-to-equity ratio. Tilray has a debt-to-equity ratio lower than many of its competitors in the cannabis industry, indicating that it does not rely heavily on debts to finance operations, which is good. Net profit margin. The net profit margin of Tilray is remarkably negative, which means the firm makes no money left after considering all charges and taxes. It is a significant threat to Tilray. Tilray is a risky investment. In conclusion, Tilray exhibits positive financial indicators with a low debt-to-equity ratio and strong liquidity, showcasing stability and adequate resources for short-term obligations. However, concerns arise from a declining current ratio, deeply negative operating and net profit margins, and a fluctuating gross margin, raising questions about the company's sustainability and profitability in the long run.
If you would like us to research a stock, Please tweet at @CollectiveRC or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective Research. Active fundamental research in global capital markets. Make informed decisions.